Hello, everyone. I'm super excited for this panel on where VCs are placing their bets. We will be doing an audience Q&A, so please start thinking now what you might want to ask. But without further ado, we'll jump right in. Before we officially jump right in, I'll give everyone just a few more moments to introduce themselves and their work.
Awesome. Hi, everyone. I'm Nina Achadjian. I'm a partner at Index Ventures. I really focus on investing in entrepreneurs that are placed on this earth to build the business that they're excited to build. We do everything from seed all the way through late-stage growth, and excited to have an open and transparent conversation with you guys.
Cool. Hey, everybody. Chen, partner Greylock. We do seed, Series A. I personally do a lot of enterprise software, and super excited to learn from everybody. Thank you.
Awesome. I'm Peter, partner at Felicis, a longtime operator, first-time institutional investor. I'm recovering from that game, I would say. Do a lot of seeds and A's, looking for founders who have a ton of grit, and we can talk more about that as we go today.
And so now let's start. I guess we can get the elephant out of the room. Where are VCs placing their bets next year, and is it all AI?
Have you guys given any term sheets to a non-AI company? Maybe we should start there.
It's probably been a year since a non-AI company, right? It was this classic database, but all things I would say are AI related. So either benefit from AI, use AI, or they're non-AI like a data company, they would benefit by more apps, And so it's all AI world we live in it.
I think we're looking at a lot of companies that are placing bets on companies that are using AI in unique, different ways. I think that the foundational model companies have all run away with the right amount of funding, and they're on their way, but really finding those companies that really deeply understand an industry and a problem and how do they apply that, that's what we're seeing a lot of companies these days.
Yeah, for us, I have to say, it's been super hard to invest in this moment because things are changing just so rapidly. I mean, if you even look at like the investment arc in AI, originally there was Jasper, that was kind of the first AI application that had 0 to 15 million growth, fastest ever. Then people realized post-ChatGPT, oh, foundation models are really where you want to be investing, so tons of dollars flowed into foundation models. Then we had the DeepSeek moment. Google, picked up and got in the game with Gemini. And then everyone was like, OK, this is going to be commoditized. So dollars flew again to vertical applications like Harvey and Cursor and many others. And now it feels like almost it's come full circle, where you have a lot of the underlying foundation models, like Anthropic with Claude Code, basically vertically integrating to not only have the underlying model, but also an application. And so as a VC, we sit here and we ask ourselves, how do you really differentiate how to invest in something where things are moving so quickly? And for us, we can talk more about it, but we spend an enormous amount of time really assessing the entrepreneur and how resilient they will be able to be in a moment where things are just rapidly changing.
Yeah, I mean, that's a good point. How do you differentiate?
Yeah, we have this conversation internally with my partners where, has the founder phenotype changed in this AI moment? And I think a lot of the characteristics of what we used to look for and what we look for now have stayed the same, right? You mentioned grit and others that passionate about the problem, having domain expertise. I think for us, number one, more so than ever before, you have to be deeply, deeply intellectually honest about product market fit. And because there is so much demand from enterprise companies to try the latest and greatest in AI, sometimes there's false positives of product market fit. And you can get to a lot of revenue with not really having true ROI. So I would say that. Second, being able to attract amazing talent, more so than ever before. We feel like the talent war in AI is just unbelievable right now. And then third, I mentioned being resilient. You have to be able to pivot, shift 15 degrees, understand what's coming, what's coming around the corner in terms of research to make sure you're not blindsided. Every time OpenAI has like a dev day, there's a joke that like 1,000 startups die, and that's why being resilient is really important.
Well, I mean, those startups probably, should have picked something else.
Says the former OpenAI guy.
Yeah, I wasn't OpenAI before. I do think that there's a few things that I would encourage every founder to think about is, first of all, everyone's doing a proof of concept contract with you, they're all trying like 2 different competitors at the same time. So that doesn't really mean much. But if you're able to go deep and really kind of solve a true need for them in a way that these, kind of regression to the mean type foundational model companies can't do, that's where the important part is. And there's actually a lot of data out there that's actually not in the models today, if you think about that. And I look a lot at that piece of insight is like, are you able to generate data? Are you able to extract data out of people's brains? I'll give you an example. Like if you take a look at sort of interviews, if you wanted to interview for a job, those interview questions, some of them are on the internet and maybe have been trained on, but like that back and forth, that dialogue is stuff that is new to the models. So how are you able to find those unique data flywheels and keep that sustainability? I think that's going to be very important going forward.
I think the data thing is a great mode or a great thesis to explore, because let's be honest, what are the 2 or 3 things we know are working? So chat's working, so ChatGPT, Claude, and chat-related businesses. Coding's working, right? We talk backstage, cursor, cognition, code's working for sure. Increasingly, to Peter's point, maybe customer support, like interviews, something like that is working. So those 3 markets are working for sure, and I think we sit around thinking, okay, they're working, and 2 questions. 1, what's next, right? Either verticals or the horizontal problems. Or I also think about, of those things that are working, what will they break, right? So we're like, code's working, but code's breaking a bunch of other things in the enterprise, from like CI, QA, security. So we think about, okay, what's working? What will that break, and can we fix it? And then, I don't know, quite frankly, we sit around thinking, what are the next 2 or 3 markets that will work? And to Peter and Nina's point, there's a lot of false signal, right? There's the false summits, if you will. And I think the question is, you have to be honest if you have a false summit to keep moving on.
Yeah, that was actually going to be my next question in terms of what's working and like what categories specifically within AI excite you right now.
I'm seeing companies that are going fully vertical, right? So they're not just going to be some tool that some knowledge worker uses. I think that's going to be commoditized, or rather, it's going to be a lot of competition for that. But to take like an industry that is like insurance or a specific part of healthcare and go super deep and solve everything up and down the stack, that's where a lot of the value is going to accrue, and I think that's where it's going to be extracted. Because at the end of the day, this new technology is able to do real work. That's the difference between this and then some line of code or some database back in the day, or some web app or some mobile app. This is, real work is going to get done. And so if the companies that figure out how to crack the true verticalization of an industry that's deeply important to humanity, I think they're going to extract a ton of value.
I think what Peter, I totally agree. The business models of the past 10 years that we invested in were software, right? Software is a business process, order to cash, hire to fire, represented bits. And that was kind of yesterday's biz model. What we're seeing today, and Peter's comment about work is correct, we're replacing not the software, but the labor or the problem solving. So if a business process step A, B, C, D, and E, the first thing we're seeing is going from step A to step E faster using AI. I think we want to see startups that go from step A to E and skip steps B, C, and D in the middle with some level of intelligence.
Yeah, I mean, one of the most recent investments that we made is in a company called Quilter. And what I really like about this is it is leveraging the best-in-class AI research, specifically in reinforcement learning, to solve a problem that is experienced in every hardware manufacturer, which is designing and manually laying out printed circuit boards. A PCB is in pretty much every electronic consumer device, and light bulbs and car tires, et cetera. And this founder who worked at SpaceX was like, wow, this is the moment that this problem could actually be solved using AI. And so I really like it because it's not just a wrapper business, but he's actually using the underlying technical advancements to solve a really difficult technical problem that then takes away a lot of manual human labor.
Yeah. I guess just one more thing I added now that I think about this. There's going to be a class of software that's going to be dealing with these agents. Like we're going from counting things in billions of users to just billions of agents can be running around there. So what is the infrastructure to actually observe what these agents are doing? These are non-deterministic models, right? So you could have a customer support agent and you could have millions of calls. What's actually happening there? How are you going to monitor that behavior? How are you going to change that? Those are the new pieces of infrastructure that are getting built now. We're seeing a few companies doing that. So that's another category I would say to take a look at.
Do you have any hot takes on what isn't working right now?
That's great.
Trying to not throw any companies
Yeah,
under the bus.
I don't want to keep going
We'll
first,
throw each
but-
other's companies under the bus. How's
Sure.
that?
Or maybe what can get better, what still has a long way to go, which many things do, but like,
I mean, it's interesting, right? Like the concept of a moat was brought up before, and I think having a real thesis for why this is a white space that will not be taken up by a lot of the underlying foundation models is a key question. And it's okay if you don't know for sure, but having a hypothesis where it's either, hey, we get access to this enterprise data and we have some kind of a data flywheel that then really makes our last mile of the model much better on a personalization basis, or we've built a workflow that's kind of like sitting on top of this rising tide. As the models get better, our product experience and lock-in of the workflow will be even better. So I think it's really important to have a thesis on what is defensible about your business, and those are some.
I think Nina said something about Quoter that resonates. It's working. It's the right time to start it now. It's working now. So I think the question is, what's not working is not working yet. Like what's not ready yet. And look, it's easy to say in the fullness of time, AI and all these business models will be real, right? I mean, I worked in technology and venture years ago when Webvan was a thing, right? And that didn't work, but Instacart did. So there's definitely a thread there saying it's not working now, but could work in the future. Peter and I were talking backstage about consumer. It's unfair to say consumer's not working since I do mostly enterprise software. Consumer and AI experience will work. They're not working yet, right? So I think there's a conversation about what needs to happen for that to start working soon. And so there's companies that will either A, unlock that, or B, take advantage of that wave.
Yeah, I think maybe the hottest take I can offer is that I think that a lot of the software, like the SaaS subscription models, like all of those margins are going to get completely squeezed over time. And I think maybe that's more consensus now, but I think that's why I believe a lot in the deep verticalization, because that's where you can really kind of defend that that business model. But it's just so easy to create software nowadays.
Yeah.
And I think that consumer, and I've actually worked in a lot of consumer companies. I worked at Instagram, Facebook, Uber, and ChatGPT, and I would say that it's going to be really hard for a company to break out right now because I think so much of those large companies are still innovating and kind of capturing the attention or the consumer demand. So despite working there, I actually do invest a lot in enterprise just because that is where I think the value is right now, but that could change over the next 6 to 9 months.
Yeah, and also maybe while you were talking, when I originally joined Index, I focused on vertical software. So it's software built for one particular industry, like, for example, Procore, that's the operating system for construction, or Service Titan, that's the operating system for the trades, Toast for restaurants. And I think some of those industries that already have a really big incumbent that has the data and the distribution, I think AI will be a tailwind for those businesses. I think it'll be difficult for a point solution AI company to like come in and replace those. And I think there's a real opportunity for some of these incumbents to partner with latest and greatest AI startups via a marketplace to help make sure that their customer base has access to some of the best AI technology. So that's probably another area that feels more.
I do want to push back on that a little bit because I do think you want it to be spicy, right? So we talked about this off stage. I do think that those big companies will not make the transition to AI. I think that it's just too slow. And I think that all of the top talent here are starting companies or joining startups because that's where all the alpha is. And I think that there is, and you've seen this before. I'll use Granola as it's a non-portfolio company. I'll just use it as an example. I believe Granola beat out some of the incumbents because they had a better product, right? And I don't know their actual numbers, but I will say that the product quality will overcome distribution advantages if you have a good enough product.
Do you think that's sustainable?
I
think that the debate is distribution versus technology, right? And so the incumbents, to Nina's point, will have brand, data, customer contracts, distribution that eventually they can add AI potentially versus technology like Granola that doesn't have distribution.
I think there are a lot of companies in the mobile era that prove that if you're not mobile native, I don't think you're going to be durable. And I think that there is something to be said if your founders are AI native and have that DNA. They're researcher founders. We're seeing a lot of researcher founders who are very commercial. One example I would say is Periodic Labs. We were the first check in Periodic Labs, and Doge and Liam are just extremely great researchers. But when we had dinner with them, we talked a lot about go-to-market because that's where their minds are going right now. And so I think that if you have a ton of those really awesome, brilliant AI researchers who also really get business and product, that's where it's going to be very hard for any other big company to replicate.
I think business and product as an amalgamation of talent is always special. But I think the point you made earlier obliquely about business models is the right question. We haven't seen a net new business model achieved yet, right? And I think the interesting about the internet and then web and the web mobile era is like we tried new business models took root. And the most powerful way to be an incumbent is not just like slap mobile on top of a system of record or slap AI on top of another system of record, is to change the business model, right? Like Google changed everything by saying, hey, we're gonna just sell everything and monetize via ads. More or less, right? That's kind of unfair, but saying, Microsoft sold Office on a per seat basis, Google gave away email and sold ads. And so if we can figure out a business model change using AI, that's more powerful than, quite frankly, other distribution changes.
I agree with that. I think the other thing we're to figure out is pricing, because right now there's a lot of per seat pricing. So not right now, but previously, I would say 6 months ago, 9 months ago, a lot of per seat pricing. But that's really challenging because what you're doing is you're actually, it's behind the scenes, the GPUs are cranking, they're running really hot, right? That costs money. And so really we should be pricing on how much work is actually achieved. And people talk about outcomes-based pricing, which I believe in, but there's also really weird perverse incentives. If you're well, put this tracking pixel there and let's see if it actually converted. So I'm curious to hear your thoughts on that because I think I'm still trying to figure out this pricing thing. I think we all agree that seat-based pricing is dead and has to be some kind of outcome/work-based pricing, because for the first time, we actually have technology that can do work, not just enable work, but do work.
Yeah, I think it's a phenomenal point. I really like the outcomes-based pricing, especially for things like customer support. Is the ticket resolved? Okay, you pay for it. But then comes the question of true margins over time.
Exactly.
Where does value accrue? I mean, there was literally one moment where I think the zeitgeist in the venture capital community was like, should we just buy NVIDIA and Google stock at this point? And in the beginning, a lot of these AI startups were raising money and they literally put on the slide we're raising 15 million bucks. 8 million is going to compute, 7 million is to hiring and operations, and so I think there's a big opportunity, and I think we're still in the early innings to figure out what that pricing model will be.
I think that the question is, we talk a lot about product go-to-market fit. We talk about the unit of value for both cost and unit of value for pricing. I think what Nina is referring to is the unit of value for AI as a consumer is not deterministic. It's unknown because depending on the context, the unit value could change. It's not tokens, right? It's pretty so that you can burn tokens and not create as much value as a different system. So I think we're still in the earliest stage of trying to understand both what the unit value of scaling is, and that's pretty clear, GPUs and tokens, but what is the unit value of customer value? And it could be outcomes, it could be results, and I think founders out there that can figure it out and unlock this question, I think will have a tremendous opportunity ahead of them.
Yeah.
And I wanted to talk about some of the startups because valuations are getting crazy. They're raising and growing faster, so fast. Is that good or bad? Good and bad?
I think the story, the end of this story is yet to be written. I think it's incredible just to see the new milestones of revenue growth. When I first joined in the venture industry, it was going from 0 to 1 was best in class. 0 to 1 million in 1 year was considered good. Now it's we have companies that are going from 0 to 100 million in 1 year. Yeah. And then I think the conversation becomes a lot around quality of revenue. And to the valuation point, it is tough because we're in really what feels like uncharted territory if you look at public market stocks and where those market caps are. And I think that there's this moment where if you look at what's happened to the venture asset class, there's just been so much capital that has flooded into the space from 2020 onward. It was like the crossover funds came in. There were many, many seed funds. Funds got bigger than ever before. And I think the question that everyone is asking is, what's the reconciling moment when these companies go public? How will they be valued? And you really have to suspend disbelief to invest in some of these prices. And that's why, for all three of us, being early to the game is really important. So we spend a ton of time getting to know founders at the pre-seed level, participating or leading the seed, trying to lead the A, because after that, it seems like just the wall of capital that comes in is enormous. And that puts a lot of pressure on founders. You know, I always find it funny when founders are like, I really want to raise this round because it makes it easier to hire. And I'm like, the people that you're hiring know that their 409A is going to be much higher versus hiring now. And so, you know, I think time will tell.
I actually talked to a founder today who wanted a lower valuation on the term sheet. I won't say who, but that was very surprising. I was not ready for that playbook. But for the right reason, I want to make sure to set the right expectation. This was a very experienced founder, right? And so it is, you know, they're out there. You just got to go find them. I won't tell you where I found this one, but you can go find yours.
Did you? Okay. Something I'm actually curious to know, do you see, I'm sure you see a lot of people revisiting old ideas now that AI is blown up. What are some interesting old ideas that you've seen be revisited in the past few years?
I would say just chat as a system engagement on top of system record has always existed, right? Slack tried to be that office operating system. Remember when like Slack had every app inside of it? And it didn't really work, right? Just because like humans and AI really can understand or talk back. But now chat as a system engagement has become the de facto front door to AI. It can be succeeded by video and voice and other things, but I would say chat and voice as an interface is now real. So remember like Alexa came out and Google Home, it kind of worked, Siri kind of worked, but didn't. I would say with AI and LLM, text and chat and voice have unlocked at real system engagements on top of other applications. And it's an old idea, it's an idea that's been around for a while, but it's actually working now. And because it works, it's enabling a bunch of different business models.
Yeah. My latest obsession is AI-enabled marketplaces. I love this. Of all the places I've worked, Uber was one of my favorite ones, just because of how amazing the flywheels get on the demand side and the supply side. And once you get the right kind of flywheels going, it kind of starts to really take off. Right now, we're seeing a lot of really amazing founders who are rebuilding marketplaces with AI at the center.
What's an example? I'd be curious.
Yesterday we led the Series C in Mercor. That's one marketplace. I led the Series A in a company called Paraform, which is a different kind of hiring marketplace. There's one I have a term sheet out, which I won't tell you about right now, but I'm checking my texts.
This guy.
This thing, for another one, but I really do think this is really huge because, again, remember, this is the first time technology can start to do work. And so if you take a look at the pieces of the marketplace that can be automatable, or even things that are supported well from AI, Paraform is a great example. The fact that like you're able to now, LLMs are great at reading a bunch of text, right? So you can now sort through a bunch of unstructured data and figure out exactly who this candidate might be a perfect fit for. And that's unique. That's a new superpower, right? So I think AI-enabled marketplaces, if you're building one of those, like find a way to get in touch. I'd love to talk to you.
I think robotics is one of those things that like every time somebody makes the case for like this is the moment for robotics, it turns out not to be true. But I genuinely believe this could be the moment for robotics. And I think that a lot of people are talking about physical AI, right? What are the data sets? I mean, there's so much just like visually, and I think the fact that we have robots driving us on streets right now via Waymo is one of the biggest data points of what's yet to come. And things like vision language action models have been really transformative in being able to leverage a lot of the underlying technology in AI to be able to talk to robots and then being able to do things like the famous example of a robot never having seen a photo of Taylor Swift, being able to take a Coke can and identify out of 3 celebrities which one is Taylor Swift and put it on that photo. And so I think it's risky and there's still a lot of science to be unlocked, but that's an area that I'm excited about.
Yes, and just doing a reminder that we will be doing audience questions, so get ready for that. Before we leave, well, actually, I mean, this is kind of an AI question, but also not an AI question, because before we move on from AI, what is there anything that's not AI that's exciting you guys right now that you're placing bets on?
I mean, I'm still excited about taking like pen and paper, processes and digitizing them. I think AI has been a big tailwind of that because you can now look at like so many unstructured documents and actually make sense of them and eliminate a lot of the manual labor. And so I'm still excited about a lot of blue collar industries that do things incredibly manually. And for years, people have been like, oh, these industries don't buy technology. They're all like SMBs. But in fact, if you zoom out, a lot of those businesses are quite large and they're run by amazing entrepreneurs in and of themselves that would love to use technology. They just want a product that's built by people like them, specifically for people like them. And so I think that's still a big opportunity.
I think let's project the next 3 or 4 years. What's happening is AI's world we're living in it, right? We're going to have more software created by AI the next 5, 10 years than we had the past 15 years, right? Vibe coding aside, current cloud code, et cetera. It's going to both create a huge wave of security, storage, code-related startups, all the plumbing around app infrastructure, app security, clouds, on-prem, cloud services, but even more. So you think cloud mobile was a huge driver of all spend in IT. AI is going to be accelerant because all of a sudden there's just more apps, more demand for mobile, more demand for like LTE, more demand for Wi-Fi because we're going to have more applications serving more verticals in more countries than ever before. So is the AI? Not really, but it's going to benefit from this bow wave of AI-built applications and solutions that's going to lift all the boats.
Yeah, so I have one that's very different. That's definitely not AI. Shout out to my partner James, who actually has this thesis. I'm just kind of representing it. There's going to be a lot of kind of onshoring of critical materials. So if you take a look at sort of robotics, in order for that to work, you're going to need a lot of magnets. And where do all the magnets come from right now? Not the United States. Where they should probably come from is the United States. And so like thinking about those types of things that are, this is what I love doing as an investor too, is think about the uncorrelated bets that we have in our portfolio, and something as physical as that is interesting. Probably no founders here in TechCrunch, but that's cool. But that is one of those things that is strictly not AI that I think was going to come around the corner.
What are some of, okay, so now moving away from AI, talking about other places you're placing your bets, what are some business models that you always find yourself betting on time and time again?
I mean, SaaS was such a beautiful thing, right? Like recurring revenue. And I think one of the conversations happening in boardrooms, especially with CFOs, is the unpredictable nature of consumption-based or outcomes-based AI pricing, because they want to be able to forecast, okay, I'm going to spend X amount on this AI solution, and that is, I think, really difficult. The other thing that has been really interesting is looking at companies that are doing like software for hardware, where they've taken a lot of inspiration from like Datadog, for example, which had a really unique pricing model with credits, and figuring out like, hey, what's the right way to think about either observing or understanding or enabling your underlying data. And so I think that's another conversation that's happening. But I would say predictability is still something generally business operators deeply care about.
I think SaaS still continues as a beautiful business model, but to Nina's point about robots and onshoring, we're going to see a weird pendulum shift back towards, I think, private cloud, towards selling boxes and systems. I mean, NVIDIA's selling large computer systems, right? And that was a previous life where we sold huge workstations. It was basically software wrapped with GPUs and CPUs, or now be software wrapped with robots and magnets. I would say SaaS and outcomes-based pricing still makes sense, but for the physical world, be it physical systems around compute and storage or security or robotics, you're going to see, again, a return towards software bundled with hardware. And that might be magnets, might be a robot, maybe a self-driving car, but you're going to see, I think, that business model come back again. And it might be monetized via a subscription, but it's definitely going to be, we're dealing with physical boxes and power cables again.
Totally. Yeah, I love that. I think that can't forget that we still live in the physical world. So that's going to be an evergreen thing. And then in that, along those lines, I think the healthcare sector is really interesting because we still have bodies and bodies deteriorate and we need to take care of them. And so that is a very huge part of where I think some of the alpha will be. I guess in addition to that, I've already said this already, but I think the marketplace business model is fantastic. Because when you have the two flywheels or the two sides or three sides of the marketplace running, you get a lot of an advantage, and you get pricing leverage, and you get a big, huge moat and an advantage. So that's I think it's going to be evergreen.
Healthcare is one market, one vertical that I think the combination of outcomes-based pricing is what we always talk about. And if someone can unlock AI healthcare with outcomes-based pricing, I think everyone in this room would benefit.
Yeah, love it.
All right, if there's no audience questions, I'm just going to keep going.
You want to ask? Are there audience
Are there
questions?
audience questions? I think there's a...
We answered everything.
Questions,
Oh, yeah, 'cause
insults?
there's like a mic. Oh, yeah, I was waiting for someone
Yeah.
to go stand to the mic. I was like, is no one going to stand up? All right.
Hey, my name is Vijay. We are working on a foundational model for scent. Enabling for scent,
Okay.
enabling robots to smell.
Oh, scent. Oh,
Scent.
Scent.
Oh, wow.
Scent.
Okay.
So we have some customer interest, and but also need to be able to scale to get it to a price point where it's affordable. Any thoughts or insights around how do you balance the chicken and the egg problem?
I mean, you probably have to get some early design partners to be able to build like a few units to get enough data where you feel confident to then raise money to be able to produce it at a scale that makes sense. And I think figuring out what those design partners get in return, because they're probably not going to pay you that much if it's early, is usually, an important thing to do. And a lot of startups, if they go to customers that are used to doing these design programs, there's a little bit of an understanding of a give and take. So I'd probably start with some design partners and validate the technology before you figure out exactly what like the unit cost is going to be.
Yeah, my advice for you is just to make sure you understand the customer problem you're solving for. And it's really hard to build a technology in search of a problem. And that is a cool kind of like, wouldn't it be cool if robots could smell? But really, what are the key issues right now that are not scaling? Start there, and then build your product from that.
Cool, thank you.
Oh, thank you so much. We're building, actually have a intimacy method, which is to end loneliness. And my question is that I know everything about my users and how they go through the app and different ecosystem that they're gonna go through, but I'm not very educated about funding because it's my first time a company that I've never used investors yet. So if you can give me advice on and that perspective of finding the right investor for us.
Funding is tricky. I'd say every investor looks at three things, to be cliche. It's product or tech, the market attractiveness, and the people. And basically at every stage from seed to IPO, you're de-risking one of those three variables. The reason why investors pay less on a valuation of seed is because risky team, risky market, risky product. And you pay multiple billions in valuation at IPO because all three of those things are de-risked. So when you think about fundraising, it's what can I do to de-risk these three questions for my investors? De-risk the people, the team, myself, and the folks I hire. De-risk the market, and that's either customers lined up or development partners. I de-risk the technology, how that's proven. And so think about those three variables. The more you de-risk all three of those things, the better valuation, the more money you can raise.
Thank you so much.
Hello, my name is Simon, founder of UpDoc. We're Australia's largest telehealth platform, connecting patients with doctors at a click of a button. We're actually all ex-Uber, bringing the exact same technology. It was pressing a button to get a car to doctors. I guess the question I have is, when you think about diversity of your portfolios, how do you think about internationally based businesses where their growth is significant in international markets, but no real energy or focus on the US due to the fragmented nature of the healthcare system? You touched on outcome-based pricing. That's kind of our business model. Yeah, really keen to get an understanding of sort of how you think about, yeah, that.
Well, this is your AI-enabled marketplace
Sure.
guy. But on the international
Yeah.
point, I mean, Index, we have a big presence in Europe. And we believe that great entrepreneurs can come from anywhere in the world, not just Silicon Valley. And I think the thing that you want to make sure that you address in your pitch is like, can you build, a $250 million ARR business to $1 billion ARR business with just your domestic market? Or do you have to expand to other markets? And how low-hanging fruit is that? How complex it is? But I mean, there's phenomenal businesses being built outside the US, and more so than ever before, I think the barriers to building outside the US are coming down. But yeah.
I'm also ex-Uber, so good to see you. I'll just be very blunt. I don't think we look at diversity of geography as a primary checkbox. Our job is to be in the best businesses in the world at the best risk-adjusted prices. So I think that angle, as long as you're going to be able to grow to a big business, it doesn't matter where you're operating. But that's the primary thing.
Thank you.
What role does IP play in your decisions, either in the target company or them stepping on the IP of others? Does it play a role at all?
I mean, the deeper the IP, the better, right? I would say we like IP. I don't know if the question is IP protections like patents or trade secrets, et cetera.
That's right, yeah.
Look, I would say in a world where IP, I think IP matters. The deeper the IP, the IP then is great, but IP could be a patent, it could be insight. Like I think, Peter and Nina were saying, we want founders to have some intimate insight with a customer problem or technology. I would say it matters, but it's one element of multiple things. Speed matters, execution matters, hiring matters, like understanding distribution and sales matters. We have a conversation earlier, Peter and I, around distribution matters in many ways more than IP. So we say you have IP, have IP protections, great. That's just one element of like 4 or 5 things you got to think about to start a company.
Hi, my name is Ashish Mangla. I want to bring you back to what you were saying, the moat question and how can you build a resilient company. What's your take on enterprise AI? Because ChatGPT, most of the training is on public data. It still is not generating accurate answers. Actually, I have a customer in auto industry who's saying that ChatGPT was showing answers how to change oil in electric cars for them somehow. So what's your take on enterprise AI, and is it somewhat resilient, or are you seeing any patterns in there?
I mean, I think probably all 3 of us would agree that there is a goldmine opportunity in unlocking enterprise data and using that to really solve this last mile of fine-tuning based on your data set. And I think companies have taken different approaches. There's obviously a lot going on in reinforcement learning and leveraging enterprise data to provide those answers. But there's continuingly questions around permissioning, security. Can you use the data in a certain way? We're investors in this company called Transcend, which basically is helping a lot of companies. Basically, if you're talking to Nike with like a customer support ticket, and Nike knows that you bought Air Jordans last year and you're asking about some other item and they want to upsell you on a new coming Air Jordan, there's a lot of data permissioning depending on your age, your state, what you've opted in and opted out of. And so I think those things are still being figured out, but the opportunity, I believe, is tremendous.
Thank you.
Hi. As a newer founder working on a seed round, I'm building the holistic healthcare hub as a marketplace, and I'm curious, how do I get in front of you?
Well, you're in front of me right now. You're in front
Yeah.
of all of us. For me, just personal thing. I just always do warm intros, so those are the highest signal ones for me. So, finding a way to get in touch that way is great. I'm happy to chat with you backstage if need be. But yeah, I think that's in general the warm intros are what. I'm curious to hear your guys' answers. How do they get in front of you?
Warm intro matter. Jerry at Greylock.com. Jerry Chen on Twitter. Slide in.
You're better at email than I am. So.
I'm not. I just have more AI bots. Warm intros matter. we try to read everything that comes in. Honestly, I probably can't, but we try. But like, hey, it's not a space I'm looking into. So if you don't get a response from me, it's probably not a space or market that I'm focused on. But you know, add me on LinkedIn, add me on Twitter, Jerry at Greylock.
Nina at indexventures.com.
Fine, I'll do it. Peter at Felicis. It's pretty easy. But I can't, the superhuman's just not good enough. I can still
Now give your phone number.
Yeah, phone number. You start. You go first.
And I think we have time for one more question.
Yes, my name is Pearl. Thank you for sharing your insight. I guess this show is all about AI. My question is more about the people. So basically, I think AI is more about personalization, customization, people centricity. And as a founder, I'm just wondering, what kind of story do you prefer, like, to invest in this founder as influencer, as a technologist, as whatever you imagine? What kind of story make you more impressive? Thank you.
I'll start. The story is, for me, is the story that teaches me something that I never thought of. Something that you really is an earned piece of insight from the hundreds of customers that you've talked to and you've distilled down. I'm still trying to like polish how to say the saying, but for me, I'm looking for the people who have the grit to actually polish a rough, kind of stone into a gem, and to really distill the simplicity of like, this is what the market's about. Here's the secret. Those are the ones that I actually remember. Otherwise, it's just I can't really parse through it.
I think your story is, why are you the founder that should be building this business? Full stop. It's the grit, it's the insight, it's your achievement. Why are you the founder? Your biography should be building this business.
Yeah, I mean, I'll end with a story. One of the Series A investments I made last year is in a company called Viscom. The founder's name is Jordan Taylor. He was a car designer for Honda in Michigan. He got recruited by NVIDIA to be part of their experimental group when they were thinking about how some of their technology could be used for the automobile industry. And when he saw the power of AI, he decided to leave and build a platform that helps industrial designers design anything in the physical world. It's kind of like Figma for the physical world. And this guy literally lived on Costco hot dogs for 2 years. He put his entire credit card, his parents' credit card, all the savings he had, packed everything in his car, drove to Silicon Valley. And I just think he's so in touch with the product. And when I started by saying people who are placed on this earth to do this one particular thing, he's an example of an inspiring entrepreneur that even if he gets turned down by every Silicon Valley or global VC, he's still going to do this business.
And that is all we have time for today. So thank you so much.
Thank you.
Thank you.
All right, that was fun.